Taxes in marriage. How smart planning saved this couple thousands. Marriage is about love, partnership, and building a future together. But beyond the romance, it's also about merging lives in practical ways, especially when it comes to finances. Taxes, retirement planning, and estate decisions may not be the most exciting part of getting married, but they are essential for protecting your future. Jane and Mark, a newly married couple, quickly discovered that their financial future required thoughtful planning and guidance. With the help of David Tuck, a Portland tax consultant and ex-IRS auditor, they learned how to make smart tax decisions, plan for retirement, and protect their legacy for the years ahead. In this video, we'll walk through the key strategies Jane and Mark used to secure their future, providing real-world examples that apply to modern couples today. 1. Recalculating withholding and estimated taxes, how David helped Jane and Mark avoid a surprise tax bill. After their wedding, Jane and Mark were excited to start their new life together, but they quickly realized their combined income pushed them into a higher tax bracket. Without adjusting their tax withholdings and estimated payments, they could have faced a large, unexpected tax bill at the end of the year. David stepped in and personally recalculated their federal, state, and local tax withholdings based on their new combined income. He also calculated the appropriate estimated tax payments they needed to make throughout the year to ensure they covered their liabilities at all levels, federal, state, and local. By adjusting their withholdings and estimated payments, Jane and Mark were able to avoid a significant tax bill at year-end while keeping more money in their paychecks throughout the year. David's thorough recalculation ensured that all their tax obligations were met, giving them financial peace of mind. Key tip: after major life changes like marriage, it's essential to review and recalculate your federal, state, and local tax obligations. Adjust your withholding and estimated tax payments to avoid unexpected tax bills and ensure your finances are on track. 2. Married filing joint or separately, what works best for Jane and Mark? One of the biggest decisions Jane and Mark had to make was whether to file their taxes as married filing jointly, MFJ, or married filing separately, MFS. Filing jointly generally provides the most benefits, allowing couples to combine their income and take advantage of higher deductions and tax credits. However, Mark had significant student loan debt and high medical expenses. Filing jointly would increase his student loan payments because the Department of Education uses combined income to calculate income-driven repayment plans. Additionally, while some of his medical expenses could be deducted if their total exceeded a percentage of their income, combining incomes would make it harder to reach that threshold. After carefully evaluating their options with David, Jane and Mark decided to file separately for the current year. This allowed Mark to lower his student loan payments and make it easier to deduct his medical expenses. However, they plan to revisit this decision each year as their financial situation evolved, understanding that their filing status might change as Mark's loans were paid off and his medical expenses fluctuated. Key tip: while most couples benefit from filing jointly, special circumstances like student loans or significant medical expenses may make filing separately more advantageous. Consult with a tax professional to determine the best filing status for your unique situation. 3. Deducting business meals. Could Jane and Mark write off their dinners? As a realtor, Jane often met with Mark over dinner to discuss business leads, marketing strategies, and client referrals. Since these conversations were frequently centered around growing her real estate business, they wondered if they could deduct the cost of these meals as a business expense. David explained that while it's possible to deduct business meals with a spouse, the IRS views these deductions with extra scrutiny, especially when dining with family members. To qualify, the meal must have a clear and documented business purpose. Jane and Mark needed to provide detailed records for each dinner, including the business topics discussed, the reason for the meeting, and how it directly related to Jane's real estate activities. By meticulously tracking each meal and ensuring the discussions were genuinely business-related, Jane was able to deduct many of their dinners as legitimate business expenses, helping to reduce their overall tax liability. Key tip: when deducting business meals with a spouse, Be diligent about documenting the purpose of the meeting and how it relates to your business. Accurate records are essential to avoid challenges from the IRS. For retirement planning, how Jane and Mark maximize their spousal IRAs and Roth conversions. Jane and Mark knew that securing their retirement was just as important as managing their current finances. With Jane's income as a realtor being variable, they wanted to ensure they were taking full advantage of retirement savings options, even during the years when her earnings were lower. David suggested they use a spousal IRA, which allows one spouse to contribute to the other's IRA, even if that spouse earns less or doesn't work. This strategy allowed Mark to make contributions to Jane's retirement account during the years her income fluctuated, ensuring they stayed on track with their savings goals. In addition to maximizing their spousal IRA, David recommended exploring Roth IRA conversions. By converting some of their traditional IRA funds into a Roth IRA, they could pay taxes on the converted amount now at potentially lower rates and then enjoy tax-free withdrawals in the future. This would also protect them from the risk of higher taxes later in life when they start making withdrawals in retirement. By carefully planning their contributions and utilizing Roth conversions, Jane and Mark were able to build a solid retirement strategy that would give them more financial flexibility and security in the future. Key tip: consider using spousal IRAs to maximize retirement savings when one spouse's income is lower. Roth IRA conversions can help reduce future tax burdens and increase tax-free income during retirement. 5. Estate planning: how Jane and Mark secured their legacy with a revocable living trust, will, and powers of attorney. Like many couples, Jane and Mark hadn't given much thought to estate planning until David explained how essential it was for protecting their assets and ensuring their wishes were honored. Together, they developed a comprehensive estate plan that addressed their present needs and safeguarded their future. The cornerstone of their plan was a revocable living trust, RLT. This trust allowed Jane and Mark to maintain control over their assets during their lifetime while specifying exactly how those assets would be distributed after their passing. By setting up the RLT, they ensured their estate would bypass the costly and time-consuming probate process, allowing their real estate properties and other assets to transfer smoothly to their heirs and pets without legal delays. David also emphasized the need for a will to account for any assets not included in the trust. The will would serve as a safety net for any overlooked items, ensuring that all their assets were directed as they wished. In addition to the RLT and will, David advised Jane and Mark to set up powers of attorney, POA, one for financial decisions and one for healthcare. The financial POA authorized a trusted individual to manage their finances if either of them became incapacitated, handling tasks such as paying bills, managing investments, or even selling assets. The healthcare POA empowered someone to make medical decisions in line with their wishes if they were unable to do so themselves. With these tools in place, Jane and Mark felt reassured that their assets, finances, and medical decisions were protected. Their family wouldn't be burdened with tough decisions during times of crisis, and their legacy would be passed on according to their wishes. Key tip: estate planning is more than just drafting a will. A comprehensive plan should include a revocable living trust and powers of attorney to ensure your assets are protected and your personal and financial wishes are honored during your lifetime and beyond. 6. Name and address changes: keeping tax records up to date. While many modern couples choose to keep their original names, Jane decided to take Mark's last name after they got married. David reminded them that any name change needs to be reported to the Social Security Administration, SSA, using Form SS5. Failing to update your name can cause tax filings to be rejected or delayed. Even if you don't change your name, updating your address with the IRS by filing Form 8822 is critical. Jane and Mark filed this form to ensure they received all tax-related mail at their new home and avoided potential complications. Key tip: whether you change your name or not, always ensure your address is up to date with the IRS and your employer to avoid complications at tax time. Conclusion: building a secure future together. Jane and Mark's journey highlights the importance of planning, whether for taxes, retirement, or their estate. By working with David Tuck, a trusted Portland tax consultant, they were able to make smart financial decisions that protected their present and secured their future. From adjusting withholdings and maximizing retirement savings to setting up a comprehensive estate plan, every decision Jane and Mark made brought them closer to financial security and peace of mind. These same strategies can help you protect your financial partnership and build a strong future together. Ready to secure your financial future? Contact David Tuck at Anvil Tax today for personalized tax and estate planning advice. Whether it's setting up a revocable living trust, optimizing your tax strategy, or preparing for retirement, David can guide you every step of the way. Schedule your right fit call today and take the first step toward financial peace of mind.